Insider investors are selling at the fastest rate they've done so in years. The last time we saw this was 2021. On top of that, dark pool activity is starting to rise as we reach new all-time highs on the S&P 500. So what's going on? Should we be paying attention to some of the other markets as we see huge sells come through? Well, semiconductors will hold the key, and for now, it's holding the most important trend line in the world. We'll look at that later on today's show. On top of all of this, what's going on in the crypto markets? Some massive moves over the last couple of sessions, and Bitcoin's dominance since the blow up of MSTR just a few weeks ago is getting crushed. So, are we seeing the beginning of the alt season? Well, in today's video, we'll take a look at everything from stocks to commodities to cryptos to see where the biggest money flow in the world is going. Let's get into it. There are some stats that you cannot miss in this video. Well, welcome back everybody to the Daily Show where we talk about markets around the world. My name's Tom, and as you can see, there was a little bit of a pickup in the big tech stocks over the last 24 hours. Notably, Tesla almost broke to a new positive gamma flow, and of course, semiconductors started to see big moves. Maybe helped actually by that huge transaction we saw just last week in NVDA. And yes, I know that hasn't broken out just yet. We'll go into it later on. But let's begin with Black Friday sales. It looks like your family members, maybe you yourself, were spending big time. According to MasterCard's Spending Pulse, US retail sales excluding automotives were up 3.4% this Black Friday, November 29th, compared to Black Friday in 2023. MasterCard Spending Pulse measures in-store and online retail sales, representing all payment types, not adjusted for inflation. So is this a good news? Well, you would have to say yes when it comes to the American consumer. Whether it's on debt or not, it looks like people are buying. But can they afford it? Well, time will tell. I'm sure some people are buying that won't be able to afford it in 2025. And we will need to be paying attention to that because guess what? Insiders are selling once again. The last time we saw insiders selling at these types of rates was 2021, the beginning. And of course, were markets able to go higher? Yes. But this actually falls in line with what we've generally been talking about. We're around 2/3 of the way through the move, and obviously we expect further gains in 2025, but then potentially a bit of a problem. So why do we need to be paying attention to this? Well, if we continue to see record insider selling, then it tells us that maybe even those guys don't think that some of these things are sustainable. Remember, the current forward PE of the markets is 24 times. And that's getting up there with almost the record of all time when it comes to these forward PE readings. So what about year-to-date returns? Should we be concerned about December? Well, statistics would tell you probably not. Basically, when you come in with an incredibly good result like we have so far in 2024, 25.5% year-to-date return, then generally you will be bullish. Out of the last 10 times this happened, only one was negative, and even then, it wasn't that bad. So remember, whatever dip comes through during this month traditionally has been bought up in the past. Will that happen again? Well, we don't know that, but everything is still leaning in on that kind of storyline and concept. Let's have a look at Wayne's study here because, of course, Wayne Whaley is working on one of my favorite reads, which is the Toy Barometer. And according to the end of November read he's got this year, which was taken between November 19th to 30th, he saw that we had a 1.98% gain. Now, what that usually meant was that we would see a pretty good run in December. Again, more statistics here. We're leading into 22 to 3 down. Yes, there were some nasty ones, of course, 2007 most notable. But in general, you've got to say that this bodes well when you're looking at markets moving forward. And this particularly will be a 12-month read once he has all the data compiled and we get to the end of course, his period into 2025, we will come back and cover it because it was a huge reason why we've been so bullish in 2024 across the board. Why when August sold off, we were looking at buying the dip. Yeah, it does help to have these Whaley, Brett thrusts, and of course, Toy Barometer reads. They are very, very good in terms of statistics at picking these markets. Let's talk about some other things, though, that are helping the markets rally through, of course, December. One of them has to be the wall of worry. For the first time in a long time, we saw bearishness last week overtake the bulls. Now, this is a huge deal because neutrality usually sits at around 30%. But we saw so many people stack into bear positions, which I have no idea why they were doing that. but they were selling and trying to get into the market to the negative side. And of course, what did the market do? It climbed the wall of worry. And when we look at this represented, such as this AAII sentiment survey result here, you'll notice that people move big time into the bearish position, specifically after the election. And I just don't really get this one myself. But of course, if we are seeing this, it usually bodes well for the market over the next coming weeks, even month. In fact, 1 year averages just hit the lowest spread in 7 months, which again is another good sign for the bulls to climb the wall of worry. Maybe not too many concerns just yet when it comes to these reads in the markets. Now, as we all know, certain people are calling for big end of year results. I personally think that there could be a good chance that we're hitting 6,200. I think we had 6,230 as our opportunity here by the end of the year, and that was based on statistical averages. As you can see here, other people like Tom Lee tend to agree. He believes that there is a good chance that we will hit 6,300 by the end of the year, and these are the big reads that we're looking at. Now, most notably this week, you'll be needing to pay attention to, of course, the jobs numbers. And this is going to be what really reads into, will we get cuts? Are we going to see, the Fed continuously support the market? Then we've got CPI, of course, coming through, and then we've got the FOMC later on this month. So remember, these are the major three. I agree with that we need to be paying attention to, but just another read going for that bullish side of the year. Basically, 62 to 63 seems to be where a lot of pretty good analysts are starting to think about these markets getting to. Now, why is that? Well, December is rarely the worst month of the year. Since 1928 to 2023, we just don't see it falling. It just doesn't tend to be bad. Now, I remember 2018. Of course, I've been trading for a while, since 2007 realistically. And I remember this particular period in 2018 where we had trade wars. Now, we will be talking about trade wars into 2025, as I see that being one of the biggest threats to, of course, the markets right now. And it could be why we end up seeing a 10% sell-off at some point early to mid in 2025. And of course, could that be an opportunity for us? Well, we'll get into that when we discuss these things. So make sure to subscribe down below. But for now, should we be terrified? As of November 25, and really none of these have changed that much, everything has been bullish. If you look at pretty much all of the major reads that we look for, whether it's equal weighted, advanced declines, or anything like that, even if we've seen sell-off, generally speaking, these markets are making a series of higher highs and higher lows. This is not what you want to be terrified of. And you might say, well, everyone's bullish right now. Shouldn't I be a contrarian? You'll find that during these periods in markets, especially cycle periods, you want to be looking more at not what they're saying, but what they're doing. And in this case, what they're doing is generally bullish. So we have to really be paying attention to that. Thanksgiving into Santa Claus rally trades tend to be pretty good. As we know, small caps usually give us a better return overall. So far, we're in a pullback in time there. And technology strength has tended to fade into and post the election in 2016 until around the beginning of December, that kind of first week of December. Now, this is interesting because, as we mentioned before, semiconductors are coming off an epic trend line, which we'll look at. Remember to log that chart, by the way, if you're looking at it. So are we about to go into another epic run for semiconductors? They've been sitting there doing nothing for a while. Well, certainly if we were looking at the similar chart, the pullback, the sideways action of 2016, similar to where we are right now, would make some sense. Just a reminder, pretty much every bank is going for 7,000 to 6,800 next year for the S&P. And just remember, if they're all calling around 10 to 11%, generally they'll be wrong. That's because statistically the S&P 500 doesn't like to do 9%, even though that's the average. It tends to do either a lot more or a lot less. So you just need to remember that they will usually be wrong. And the markets at this stage, of course, will look bullish. So they're going to all be calling for 68, 7,000, I would say, across the board. 2016 election till now, financials, materials, we're starting to see reinflation trades come through. Metals are incredibly exciting. We'll go through those soon. So much opportunity in this market, even though we are where we are. So just remember, 2016 playbook seems to be working right now. And a lot of that has to do with the Russell 2000 seasonal patterns, which tend to be very good December, January, February into March. So will we get it again? Play catch up on the Russell. We'll go back to those charts in just a few moments, but let's talk crypto markets. Now, a lot of you are obviously very very happy with the crypto markets. Bitcoin has had an epic rally. We first started talking about this in October heavily this year. And the reason was simple. We saw statistics that were overwhelmingly bullish. Then, of course, we saw the Republican victory, and that really has kicked off at this stage a massive renaissance in Bitcoin and crypto markets. Now, these tend to last for quite some time if they follow similar paths. But where are we in terms of the paths? Now, if you want to get this chart, it's over on our X account. Links in the description down below. Give us a follow there. And you'll notice here that we have phase 1 generally being Bitcoin, phase 2 being traditionally Ethereum, although maybe that's changing a little bit, and then phase 3 large caps. Now, I don't think anything works exactly the way that people have figured it out. And the reason I say this is because, yes, this is how 2017 worked. Yes, in many ways, this is how 2020-21 worked, but it will be a little bit different this time. And we can already see that. The rise of Solana, the rise of XRP over the last couple of weeks. And yes, that is allowed to fly now because, of course, when we saw the SEC change, I'm not going to hate on it anymore. I have been a hater on XRP for 7 years, but couldn't be a hater on it after that particular read. And you can see here that generally you see Ethereum outperform. What I think is happening, though, is I think Ethereum is blending into large caps. And effectively, we are seeing an overall large cap renaissance across the board, whether it be XRP, Ethereum, ADA, any of these particular coins, they're all doing quite nicely. And this is hurting BTC dominance, which we'll look at soon. So have we seen the beginning of alt season? I would say it's starting up. And that means that some of the best alts are starting to move. Let's take a look at this chart I shared over on X, which is BTC dominance. You'll notice here that we have a very strong trend line that actually begins in 2022. Yes, it's the lows, obviously. And it's being consistent. This has consistently told us to be in Bitcoin the entire time through this market rally so far. But guess what changed? Only a few days ago, we started to see a huge fall in BTC dominance. The rise of the alts, the rise of XRP, the rise of course, Ethereum as well breaking through. BTC dominance is under struggle, and this, of course, makes a lot of sense when we're looking at the markets. We saw those huge dark pool trades coming through on FU as well, which is obviously a 2 times leveraged ether. And we'll look at the big charts that need to break out there because things could get bonkers pretty quickly. We know what it is in alts. They tend to rally very hard. They pump, they dump, they take a sleep, and then they move on to the next one. You've got to be careful what you're doing here. Let's move back into the normal realm, though, of stocks for a moment. One of the largest transactions we've ever seen on IVV, the second largest in the last couple of years, just came through on the stock market. Now, this is a pretty big deal because when we see large trades like this, it could mean a pause for a little period. Now, sometimes they're through the rallies and we continue on, but generally they will be at a point of kind of like pausing for the markets. And you can see here that we're getting some in what technically is a statistically weak kind of week. The first week of December, traditionally not that great for stocks, and only up 33% of the time. Just remember though, if you're trying to like fandangle it and short and then of course buy back in and do all those types of things, it's not really worth it. Even though it might end, or generally speaking, negatively, it's not really worth playing that game. You've just got to basically say, okay, well, if we are seeing these trades, if we then see a pullback, do I want to be a buyer? Here's another large one coming through on RSP. Again, the equal weighted ETFs getting some large dark pool transactions on them. And that's leading into us thinking that maybe we're going to go sideways here for this week, up, down, and all around. I wouldn't, of course, be removing my positive kind of positions, but it's something to be thinking about in the back of your head. What about the other dark pools that we've been focused on? Of course, the treasuries ones have been working incredibly well. Along with Wayne's data telling us that yield was most likely going to drop, we've seen huge dark pool transactions coming into treasuries, and that's led on to them being pretty good. We also saw a monstrous transaction come through on, of course, NVDA last week. And then since then, semiconductors have held the trend line that we focused on in our live sessions and our macro class. If you ever want to be part of the macro class, by the way, it's part of our paid subscription that we obviously do live streams every day for the market open. And of course, we do a 1 week special on investing and trading and swing. So that's a really cool 1 hour session. We go through everything, a lot of stuff that we don't necessarily cover on this channel, specifically rotations more than anything else. But here's the NVDA position. We know this is in a bullish leverage position, and we haven't quite seen a very important call wall be broken just yet, but we will be watching for it And that's another interesting one. For this week, we're still in earnings season. These are the earnings you'll be wanting to look at. Be interested to see what Lulu says about the future based on Black Friday. But I think clearly we've seen some very large position buying in kind of consumer discretionary leading into Black Friday. And generally speaking, it looked like it was a pretty good Black Friday this year. I mean, it beat records. That's a huge deal when most people would say it couldn't have done that. Let's now move over to the S&P 500 before we look at the gamma walls. And straight up, SPX still advanced decline line, doing okay, basically still ramping up. And at the moment, we're of course very bullish this market. When you come over to the futures market, you can see it's starting to show signs of maybe a little bit of exhaustion, but that doesn't really change the longer term bull here. And you'll notice that this can mean kind of this type of chop could be coming. Whenever we get these types of reads, it just means that we might be seeing a slowdown after all of that massive movement that we had in the markets. And yeah, we might just grind higher. Remember, this is a dull market. I would not short it myself. It doesn't have any real statistical advantage to really do that, other than that miniature kind of bad stat towards the first week of December. So all this is just saying, you know what, it's probably going to be a bit of rotation underneath the hood, and we'll want to be looking at other things. Now, why could we be paying attention to this? Well, I think it's got a lot to do with calls. We know that 6,000 break was huge. We've now hit 60.50. 60.50 is a big level. We see all of the calls starting to appear here. And if we keep grinding up, every time we go through one of these big levels, it just creates positive gamma. So markets will continue to try to float towards 6,100. Ultimately this year, we of course look towards 62, 63 by the end of the year. And you'll notice that when we scroll down and we look at some of the other expirations, you can see all of these huge call strikes for the end of the year. So yes, we're in positive gamma. Yes, the markets are holding very nicely. And it looks like 59.50 to 59.60 is kind of where the floor is in the market for now. So even if we pull back, we can't expect that much more than what I just mentioned then, about 59.50, 59.60. What about Tesla? 360 all day. We get through 360, we're trading at 357 right now. 400 has to be the next target. You can already see the calls are starting to appear, and these big walls are huge. So yeah, we're not going against Tesla, that's for sure, in this current market. What about NVIDIA? Something similar. 140, 141 is the call wall. We get through that, probably going to start pushing semiconductors across the board, and everybody knows this. 135 is the low hold. 141, 140 is the call wall. So we'll be looking for big movements through those particular markets. Let's move over now to the charts. US 10-year has been dropping. That's exactly in line with what we expected. And this is, of course, leading into some traders getting into treasuries. And you can see here treasuries doing very nicely indeed, breaking through, even if they now exhaust themselves. In general, this looks like it's a pretty good base for treasuries. So things looking exactly as we would expect there. In terms of the American consumer, it's continuing to strengthen after Black Friday. So that's not a bad, there's no warning sign in the markets at that stage. And home builders are just kind of chopping at these all-time high levels. So again, no real concerns there. When we look at the US dollar, it's bouncing off the 20 moving average, which is exactly where you would expect buyers to come back in. The dollar's been incredibly strong. Tariffs, all of these other discussions are, of course, leading into this. But as we bounce up here, will we see a seller come back through? Interested in the 107 area. We'll be watching that very closely. There are some interesting trades on the euro US dollar. Currencies are starting to look a little bit more interesting up here as well, should we see switches. But the dollar is holding firm to its most important support for now. And of course, it could therefore make a new higher high and keep going ballistic. Be careful. Let's see how it reacts to 107 if it does manage to get there. That means that gold is also starting to struggle a little bit during the kind of rally of the dollar, but still holding that first bull zone. Looking for gold to continue to hold this level. Would like to see it find buyers here. Silver is something similar. Had a nice bounce over the last 24 hours, so it did find some buyers. But silver, we do want it to hold around this $30 to $30.50 an ounce. And obviously, we want to see it break back above $31.50 an ounce. When that happens, it's going to be a good time. Let's move over to oil. Nothing much. Chop City, 67 is where the buyers are, and around $70 to $69 is where the sellers are. So you just got to remember, at the moment, oil is trapped. The trend overall is actually down across the board, and it's very, very difficult to get a momentum play on that other than just to kind of trap it within the zone. We'll revisit oil when we get more clarity on its direction. Tesla, meanwhile, putting pressure on 360. You've got to think this will break to the upside at some point here. And the next major target is, of course, that magical 400. So it's going to gravitate there. You'd have to think if it breaks through 360. NVDA struggling with the 140, 141. No surprises. That's where the core wall is. But as we mentioned before, this comes back to a little bit of semiconductors. So if we actually load semiconductors onto the charts, which we'll do so now together, and then we make this a log chart, because you want to do logs on these kind of more aggressive charts, you may notice that we're hitting an incredibly important trend line that really started it all back in October of 22. Now, so far, it's held up. We've got a couple of touches to it. We've seen bounces back in the August sell-off, the September sell-off, and now we've just seen a new higher high formed here at 247, 248. Now, this is a fairly big deal. It really is important that semis try to hold this level. And we haven't seen much action in semis. In fact, I've noticed the comment section, a lot of people, oh, semis, it's horrible, it's horrible. You've got to remember, if you have like 100, 200 times gains, then it's going to need to take a little bit of a breather. So it's been breathing now since March of 24. It's been kind of an underperformer when you think about it from that aspect. But this is a promising sign of momentum. So again, if we get past 141 on NVIDIA, that could get them all started. And that actually lines in interestingly with the 2016 kind of run on overall tech stocks. So a very interesting level here for semis. Let's move over now to another market which is doing better, which is, of course, iron ore. Beautiful stuff. We've been following iron ore here for a couple of sessions, really enjoying that one. And of course, why we're looking at it is because we believe it could be a forward predictor of the Chinese stock market. Now, we are not seeing the Chinese stock market break through that 19.8 level. We are looking for it. It hasn't happened yet. You can see here, every time we get up to this point, sellers seem to come back in. But we are watching very closely. And you may notice, if you know technical patterns, it looks like an inverse head and shoulders at this stage. But remember, it hasn't confirmed that yet. So it's at a good level, but we haven't seen the momentum come through. The Aussie market continues to do very well. This one's been an exceptionally good trade. It's pretty much a day trading masterclass special, which is one of our courses. Links in the description down below if you're interested in that. Very replicable. I just wanted to kind of show it because, again, different markets. Everyone's looking at the US. I understand that. Everyone's looking at crypto right now. But the Aussie market's been doing okay as well. Since the election, let's actually get the election date up here. Here's the election over in this point here. It's actually done 4.5%. You may not think that's much, but 4.5% of a major index is actually pretty nice. And it could be just getting started. So some nice stuff there from the Aussie. US 2K, what's going on here? Just sitting there, having a chill. Remember, the Russell was a very good performer again. Post-election, you can see here, absolutely went ballistic. If we actually take the 5th here, you'll notice it's up about 10. So it's having a breather at this all-time high level. We believe it is still going to look long. We think that the mids and, of course, the small caps should perform better based on statistics. And at this stage, we're just waiting for another breakout. So it's coiling at these highs. That is not a bad sign. Even if it drops and then rallies, that will be even better. So we'll keep watching that one. NASDAQ looking towards an all-time high here. You can see it's really pumping thanks to the semiconductors over the last 24 hours. They were the best performing sector. But again, we're just getting those kind of exhaustion signs coming out of the markets. Big moves, exhaustions. Let's see whether we get a little bit of sideways action. Will this week be the reset week? Just, chill off and then keep moving up? Well, stats would say so, but we'll see. I'm not certainly going against the market, that's for sure. Let's now take a look at Ethereum versus the Bitcoin. So you can see here, Ethereum has continued to rise since we first started talking about it. And Ethereum is putting incredible pressure on that downward trend line. Now, this is the one that comes from the 2021 highs to the March 24 rally, to the May 24 rally, to where we are right now. And this could really signify, I think, the kickoff of further alts moving. Now, I know XRP is moving, which we'll look at in a moment, and so are some of the others. But you've got to remember, this is the kind of all market. So everything will start to move, you would have to think. It is a very important point for Ethereum. And in my opinion, this is a huge breakout. 38.50 would be a big deal. I wouldn't be surprised if we were going for an all-time high, should we be able to take that zone. Let's have a look at some of your favorites right now. I see this is absolutely making the rounds. Now, yes, I have been a hater on XRP for a while. I've been involved, of course, in the coin market for quite some time. And there are several reasons why. I mean, we saw obviously the huge ramp in 17. Then it got absolutely crushed. It was actually near the end of the cycle traditionally for XRP, though this time it's different, so I wouldn't read too much into it. And then, of course, we've seen significant underperformance. Remember, if you showed a Bitcoin chart over the top of this, it would really show you how bad XRP's been. Now, since it's been, let's say, opened up thanks to the SEC decision, I'm not going to be negative on it anymore. As soon as that happened, okay, all good. And realistically, it's done very nicely. So, of course, this could be a big winner of the Trump victory, and people are absolutely speculating on it. I would say it's hit the initial target. And why I say that is because it's hitting into this 283 target. I think a lot of XRP hodlers that have been sitting there for ages will be looking at taking some of the bags. Obviously, the true believers will keep holding it. But yeah, it's moving up there to surpass Solana over the last 24 hours and more importantly, get closer to that 200 bill reading. And I think 200 bill market cap is about half, a little bit under half of Ethereum. It's probably a fair kind of level for it at this stage. Just remember that's parabolic, and whenever something goes parabolic, you ride it until it explodes, and then usually we'll be able to read that, so we'll look at it. Now let's talk about Bitcoin dominance. Rate of change is absolutely getting smashed on this. It's broken below the trend line, and obviously if we have a look here at the trend line leaning back all the way back into the October lows, and we just kind of pull something here behind the board, you'll notice that effectively this is a pretty big deal. This is a significant steep sell-off followed by what looks like fairly large, of course, volumes that have gone through Bitcoin at these highs. And we saw something similar in, guess when? January. Yes, January and of 2021. And that was the beginning of the alt market. And actually, Bitcoin fell down to around 40% of the overall market at that stage, which is usually its base. So whenever you hit 40% Bitcoin dominance, that's usually a pretty good read. And traditionally, last time we hit around 60-ish, 65%. This time we're hitting 61. I think it's normal for Bitcoin to lose dominance, though, every single cycle because we have thousands of new coins and hundreds of new mega opportunities that come through. So Bitcoin dominance is down. Again, that's showing us that, yes, I think the market is moving into other sectors. And this is really shown, I think, and exemplified by MSTR's move. So we've got to remember when MSTR moved that heavily and it basically blew off the top and everyone was talking about it, that was really telling you, okay, Bitcoin might be on a breather right now. Is it over for Bitcoin? I don't think so. I think Bitcoin will continue to do well and move into the 120, 130 bracket. But you've got to remember it's now a $2 trillion asset. So it's important to kind of keep that in mind. When we actually have a look at Bitcoin itself, you'll notice here we get this read of sideways action back in the 18th of November. And whenever we see these reads, it usually has a bit of a chill. So I wouldn't be surprised at all to see Bitcoin having a chill as other coins start to perform against it. Could it get over 100 in a week? And you're sitting there in the comment section saying, I told you so. Remember, I'm bullish. I don't really mind. But as a trader or as somebody looking to find opportunities, it's not traditionally the best time to buy Bitcoin. Again, could be proven wrong. We'll see. All right, guys. Well, that means that we are pretty much at the end of today's show. As always, some things I want to summarize here. I think the markets are still incredibly bullish across the board. And generally speaking, the dark pool trades that are coming through will be interesting to see how they interact with the markets. We've seen the S&P 500 find a lot of positive gamma. Maybe it'll fall down to those put walls. And of course, the crypto market seems to be firing on all cylinders. We're also seeing certain metals do very, very nicely. So that's going to be a big discussion. If you're interested in finding out more about what we do here at FX Evolution, then check out our Black Friday sale. I think it might be over, but we might have extended it partially because there was a lot of demand on it. And of course, follow us over on X as well. We'd love to have you there, sharing some charts and of course, sharing some of our ideas up to date. Thank you so much for watching. We'll see you in the next video. Remember, non-farm payrolls this Friday. That's the big news. And Jerome Powell will also be coming out at one session. Bye for now. You have a fantastic day.